everybody. Wow. Today is the Fed day, Wednesday, May 7th. Oh, man. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FinRecipic. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is basically the same. I'm out of that PLTU that I had long yesterday. Oh, man. So crazy. We had a bigger move off of the Trump announcement into the close, which totally screwed me because I was trying to close out positions into the close and didn't react quickly to some of the shorts I had on. We had a bigger move on that than we had on the Fed today, basically. Um, this market is just so crazy. It doesn't stop. It does not stop. Spies are up 0.4% here on the day. Qs are up 0.5% on the day. It's including an uptick after hours. IWM is up 0.34% on the day. TLT, and I was starting having internet issues again into the close today also, which also is really frustrating me. There it goes. TLT up 0.4% on the day, and the dollar up 0.75%. So green across the board for America. Price action, just absolute insanity. Absolute insanity. Most of the day was very boring and quiet, kind of as expected. There was a nice little underlying bid here. Then we downticked really hard at 10:45. If my memory serves me correctly, and it's hard to even keep up with all the events day to day at this point. If my memory serves me correctly, this is when Trump came out and said that he is not going to lower the tariffs below 145% on China. I think the market's calling bullshit on that because otherwise we would have gone down significantly more. It's like I said at the time, if we have 145% tariffs on China still a year from now, there's going to be a global recession that is similar to the financial crisis, most likely. So, a little bit of a downtick for 10 minutes definitely is just saying that we don't believe half the stuff that this guy says anymore. So that's what happened there. And then we went back to boring price action until the Fed. And when the Fed hit, so first of all, oh man, I can't even remember. I think there was a headline that hit at 150, 10 minutes before the Fed, also from Trump that downticked us, right? But I have no recollection actually on what that one even was. So moving on, 2 o'clock is when we got the Fed that actually hit. Um, the big thing in the initial statement was that basically them saying that the uncertainty on unemployment and inflation is even higher now than it was previously. That the uncertainty has only increased, and the market didn't seem to like that. So we had a little bit of an initial downtick, but we held in really well. Actually found myself agreeing with what's his face, the guy who speaks after Powell gets off, big hedge fund manager, double line. Someone remind me his name because I'm blanking. Uh, Gunlock, thank you. Actually found myself, kind of agreeing with Gunlock, who I guess came out and said that he's surprised that the market didn't trade worse on basically that statement. That Oh yeah, thanks, Pat. Okay, I gotta go back. I gotta go back because I got my timeline wrong. 10:45 was the Google move. That was the Google move, right? That's when Google started to get absolutely destroyed, and that was bringing the entire market down. I was actually surprised at the amount that it brought down the market. Then Trump snuck in right before the Fed at 150 that he's going to keep tariffs at 145% for China no matter what. So I guess Besant is going to go waste his time this weekend. So, and again, the market seems to be calling bullshit on that because we barely downticked on it, or either we barely downticked on it, or like I just forgot within 2 hours. I already forgot. I guess the whole market forgot within 10 minutes because then the Fed was on. And like I was saying, so I actually what the market did on the Fed today was my expectations going into the Fed. What I was saying is everyone seems to know that Powell is going to come out. He's going to be super hawkish. He's going to say data dependent. He's going to say he's not doing anything anytime soon. And because it's already priced into the market, surprises are what move the market. So it's not a surprise. But as much as I was expecting him to do nothing and to be hawkish, I actually thought he came out even more so than I would have otherwise expected. And that was specifically off that line. I think this is what Gunlock mentioned as well. That was specifically off of that line where uncertainty has risen even further than it already was, which I guess makes logical sense. Maybe I'm overreading the statement, but it seemed to downtick us initially, and then the market shrugged it off and got bid right back up. Then there were two key points, if I can remember them, within Gunlock's press conference. One created this downtick here, and one created this uptick here. The uptick, I'm remembering, was basically when he came out and said, "Yeah, we should have started our tapering sooner." The market seemed to like that as a relatively dovish comment, and we caught an uptick. There was also a significant statement here at 245 that I don't remember what it was, but I do remember finding one other thing he said to be really significant, which, reading through the lines, I felt that there was an implication on the question of which side of the mandate is more important. I would have expected the Fed to act more based on, if they had to choose, unemployment rising than based on inflation rising. And Powell seemed to say the opposite today. He seemed to say that you can't you can't properly control the unemployment situation if you don't have a stable inflation, basically. So the read through on that, I actually thought, which was a surprise to me, was that he cares even more about the inflation component than he does about the unemployment, because you can't properly control the unemployment without controlling the inflation. So in other words, inflation comes first. And it seemed like at a certain point that kind of downticked the market. Maybe that's what this move was here again at 245. But when all is said and done, it's no change. It's as expected. Maybe even implied. I know Goldman's been looking for 3 cuts in a row starting in July. Maybe even implied that July is too soon. But there's going to be a lot of data that comes out between now. Bro, Josh, please. Don't distract me. I guess Trump is talking again. Trump saying, "I would rather make a deal with Iran than China. Can't predict on if the U.S. and China will get along. We'll put Jimmy Lai down as part of China negotiations." I don't know who that is. Depends on if China treats us fairly. This is going nowhere fast. Back to Jerome Powell. So, the bottom line is tariffs and how they impact growth and inflation. About a month or so ago, I was in the camp that the Fed should cut because I thought that the read through on growth from tariffs is so bad that it'll help to stymie the inflation component of tariffs. I've modified my thought process since then a little bit as I've seen the shipping data. Because if there's no ships getting in and there's nothing on the shelves and you need something, you're going to pay up for it, even if growth is slowing down. So there's a chance that, my original read through was wrong and that Powell is doing 100% the right thing and has to just be patient. especially when you consider that the current data is very strong. Inflation has really come down. It's not at 2%, but it's worked its way really close to it, and the employment data and everything we've been seeing recently has been pretty decent also. So as Scott Besson said, I think just yesterday, this is exactly what he said. The hard data has been strong recently, and inflation's been down. So how can the Fed act with so much uncertainty that has the potential to both raise inflation and raise unemployment when you're not seeing that data come in yet? You don't know how it's going to actually impact things fully at this point, and the current data up until this point right now is holding in just fine. So I get it. I get it. The market seems to really want this cut, but knows it's not coming. So what that turned into today from the Fed was a lot of nothing, a lot of volatility, and that's really kind of what I expected. You know, it was overly priced in. I was actually worried about upside risk by the time the Fed meeting started, because I was like, the downside's all priced in. He's not going to do anything. But what if he says something that's a little bit more dovish, actually, than what we've been seeing? It could rip us higher, but he can't be much more hawkish than he's already been. So we got all that volatility. And then, you know, out of nowhere into the close, we got this announcement from the White House on getting rid of the, what's it called? The repeal of the chip export restrictions, which is so interesting because it's so far the opposite of everything about tariffs. Um, you know, like let's open up our chips again. The whole reason, from my understanding, that this was put in place was because there was evidence out there that they were just selling the chips to Saudi Arabia, and then Saudi Arabia was selling them to China. But Trump also, I guess, has said in the statement that he is going to have another way of being able to watch where they go, something like that. So we'll see what that turns into. But the market loved that news. The chip names loved that news. You know, the Micron daily chart totally. I actually mentioned this one in the morning meeting today. This thing now broke out here through $81. So the Micron daily chart's looking great. The NVIDIA daily chart got above the big 115 level that I have been trying to lean short versus. So both NVIDIA and Micron technically are looking fantastic at the close today based off of that news. So we'll see what that actually turns into or not. Because it what NVIDIA, the CEO of NVIDIA has been complaining about, I think is 100% correct. If you restrict those chips to the world, then everybody just turns to China for those chips. I would also argue that we probably shouldn't even be restricting them to China, because if we weren't, then they wouldn't be as focused on developing their own chips that look like they're at some point going to be as good as the ones we have. But yeah, I mean, just an insane day when you then look at the SPYs to see that we're up 0.4%. Just crazy. Just one, and this has been day after day after day. We've had tighter daily chart action recently, but yesterday and today, it's just like one headline after the next. They're coming in all over the place. You can't predict the timing of them. You can't predict what they're going to be. You can't predict if the next headline is going to be positive or negative, and we just rip in one direction or the other. Sometimes the news gets fully faded if it seems like it's not important or not real or not substantial. Other times it gives us some degree of follow through. So just, I mean, how many headlines was it today that was market moving? All right, one was stock specific with Apple and Google, but then this was Trump on China, so one. Then obviously the Fed, that's two. This commentary from the Fed was 3. This commentary from the Fed was 4. And then this commentary from the White House was 5. And I guess if you include the Google and Apple, it gives us 6 different incidences of market moving news happening all in one trading session. It's kind of exhausting, to be totally honest. It's kind of exhausting just getting whipped back and forth on all this stuff. But the daily technicals are relatively unchanged, right? We had our technical pullback from extension. We're finding some support into this EDMA at the technical equilibrium zone. There is some daily support at 555. 550 is the huge level. The 200 days above that now. It seems like the market's gotten a little bit heavier, but at the same time, you have that strong systematic bid that's holding the market up. And it seems like for the last few days, they've kind of balanced each other out a little bit. So, my broader expectation for the moment really still is relatively range bound price action for at least the next week and a half, if not the entirety of the month of May, and then we'll see what happens. I mean, things are changing so quickly. Like I said, 6 different incidences of market moving news happening all in one trading session. It's so hard to say what the landscape is going to look like a month out, 2 months out. So we need to be constantly adjusting our thought process as new pieces of information occur. And, we'll see if, as we get into the June July period, if the systematic bid loses some steam at the same time that we see some hard economic data actually begin to roll over, possibly with an increase in inflation at the same time. So that's definitely to be determined. I had one other thing that I was going to say, and I can't remember what it was. Oh well, it escaped me. Oh, there we go. Oh, it just reminded me. Josh just posted here from Politico. Trump's big announcement is Medicare drug price plan. Got it. Is that moving XBI at all? Doesn't look like it. I was just about to say, I don't actually even think that what we just saw into the close that ripped the market higher with the semiconductors was the earth-shattering announcement that we are expecting from Trump. I don't even think that that's happened yet. So I was about to say, there's still a potential that there's this earth-shattering risk to the upside on some sort of announcement from Trump. But if it's going to be specific towards Medicare drug pricing plans, I don't expect that would have too much of an impact on the indexes overall. All right. I think that covers it. It's pretty much all I got. From a day trading perspective, the only thing I really day traded aggressively, and I day traded it extraordinarily aggressively, is Google. The crazy thing about how hard I traded Google today, and here's my trade executions on it. My P&L, I'm not usually supposed to talk about my P&L, but it's such a small number that I don't think anybody cares. I don't think compliance will be upset. I finished positive $350 in Google. With that said, I had a swing long on. So the fact that Google finished down 7.5% and I finished positive in it is, I guess, okay, because it more than made up my day trading in it, made up for my swing that got roasted a little bit. But yeah, all of that work, all of those trade executions to be up $350 in the name at the end of the day is just insane, as is everything in all of life right now, seemingly. Um, so that's all that I've got. I am. That's all I've got. I'm happy to answer any questions that anybody may has before you got to throw me in the loony bin. So let me scroll up here in the VTF and see if I missed anything. I'll scroll up to 410 or so. Not seeing much, not seeing much. NVIDIA news saved the market. Yeah, I mean, the market wasn't crashing to begin with, but it really brought us up into the close. From Richard, any thoughts on ABAT? No idea what this thing is. American Battery Technology. No, I don't really have too much for you on this. Something woke the stock up on volume on April 29th. So that low from that day is important. That low is $1.11. So if you're trying to be long the stock, you can't get back below $1.11. It's given a decent retracement now of the upside move that you could attempt to buy if you believe in whatever this news is. But it's a $1 stock. The extent of this move was, 60 cents or something. Um, I'm not trading a name that on a news event is only going to give me a 60-cent move. So, not one that I have any interest in being involved in. There's just not enough of a reward profile there. But if you're just asking me specifically about the technicals, it's okay as long as it does not go back below $1.11. Um, plus the Switzerland headline after hours too, so basically 7. I didn't see that. Didn't even see this, whatever the Switzerland headline is. If someone could just repost it, that'd be great. Oh, unless you mean the Iran China thing. Trump says big meeting on Saturday in Switzerland. With who? China? I thought you just told us that it doesn't even matter because we're not bringing it down below 145%. Make up your mind. So getting rid of the ACA was something new. I assume you mean the Affordable Care Act, the Obamacare thing. Did he try? I don't overly pay attention to that because it's not really a stock impacting thing, and I don't really trade the UNH names very much, so I really don't know what the deal is with that. I got no opinion for you on it. Anyway, scrolling down here. Show giving me something, but it's hard for me to read it, so I'm just gonna move on and I'll let you tell me if it's really important. From a rich end, does that include the exchange rebates? No, it doesn't. So I probably made a little bit more than $350 because the vast majority of those orders were provide liquidity orders. From David, someone mentioned this morning if Hood was a bull flag on the daily. I think they were asking about the 5-minute chart. And I mentioned that I really liked it. I like this pattern. Bull flag on the 5-minute chart in front of $50, which is resistance on the daily. The $50 level is really important for the stock on the daily. You can see its resistance from March 25th. Its resistance from April 25th, April 28th, April 29th, April 30th, May 1st, May 2nd, and today. I like, and I would not consider this a bull flag. I would consider it a bullish consolidation. There's a difference. But I like when you get an upper level consolidation on the daily chart in front of a resistance level. And then I like when you break it down and you have a small time frame pattern that looks like it's setting up for the break as well. So I think that the question that was asked to me was about the 5-minute chart pattern, not the daily chart pattern. And I said I like it. I like this 5-minute bull flag, specifically because, and this goes back to the last time, I think in an afternoon meeting you were asking me about bull flags, is the daily chart confirms it. This is setting up for a daily chart breakout. So I thought it looked really good. I love, when the ADMA catches up to the base of the flag is usually when you get continuation of that flag. So this is textbook. How would you execute it? Well, a couple ways you could execute it. One is you could buy the break of the 5-minute flag. 2 is you could buy the break of the resistance on the daily chart. So scenario 1, if you bought the break of the 5-minute flag, you're probably buying something like 49.85 to 49.90, and your stop loss is probably the low of the flag is probably the best stop, which is 49.48. I usually use a penny below it, so 49.47. The ignition bar of the breakout on the daily chart on the 5-minute, that would be the candle in which $50 breaks, is the 1025 candle. So you could buy $50 for the daily chart breakout with the stop loss at 49.54, or you could buy the 5-minute bull flag breakout where you can still use the bar in which the 5 minute flag breaks out as a stop if you wanted to, which is still that 49.55, or you could use the low of the flag pattern, which is 49.48. I wouldn't even say it's wrong if you bought the break of 50 and gave it to 49.48. So basically, there's, I would say, two entry choice options and two stop loss options. Both of them are correct. There's kind of two different trading setups there within one. One's a daily chart breakout, and one's a bull flag on the 5 minute. Trade went up 50 cents, so hopefully that's enough. Again, this is where your game planning is important. One of my favorite things in trading is to not lose money on failed trades. The only way that happens is through good game planning. So if you bought $50 with the stop loss at 49.54, it went up 50 cents from your entry price. Should be enough for you to sell some stock to cover the risk. If you bought the break of the 5 minute bull flag, same deal. It works for enough where you should have been able to sell enough to cover your risk. Then the trade fails. If you have a good execution and a good game plan, this is a failed trade where you should be break even in it at the end of the trade. So I hope that helps. What candle and prices would stop loss? Answered that. Also, what chart patterns do you typically like to see, if any specific ones to trade? So I don't like chart patterns. It's not to say I don't look at them, utilize them, and occasionally trade them. I think that chart patterns are overrated. They're important. They're important, and again, I utilize them, but I think that a lot of traders get overly focused on memorizing what something looks like, and what really matters is the substance behind the supply and demand dynamic behind what's creating the pattern that you're actually looking at. So, oh man, I don't remember the statistic, but I saw something that like 45% of technical patterns fail or something like that. But that's just assuming, I think, that you're just pulling out everything that looks like a bull flag or looks like a wedge that you could possibly think of. And it's always about context for me. I want to have a good understanding, again, of the supply and demand dynamic that is making up the pattern that I'm looking at so that I can have more confidence in whether or not that trade can work. I want to have a good understanding of if there was news, because if there's news, there's going to be a higher probability of success. I want to have a good understanding of what the volume looks like as the pattern is forming and breaking out, because the volume dictates the probability of success. I want to know what the daily chart looks like, because the daily chart impacts the probability of success. I want to know what the market is doing, because the market impacts the probability of success. If I don't know all those things, I'm not taking them. Beyond that, a chart pattern's a chart pattern. There's some chart patterns that people will call out on a 5 minute chart that I definitely don't like, because I feel like they're really more like daily chart specific. Like, I don't want to see your head and shoulders or your cup and handle on a 5 minute chart. Those are daily chart patterns. Bull flags, wedges, channels, that could be really on any time frame and or multiple time frames. So, hope that helps. From Sherry, I think that First Solar looks like a good long FSLR. So First Solar has a base that it's building out here off of 120. It's got to break out of that base, and one person's base is another person's bear flag. So if someone wanted to make an argument to me that this thing is making a daily chart bear flag between like 140 and 120, that person would be correct. If someone wanted to make an argument to me that this thing is basing off of 120 and maybe can break out off of that base, that person would also be correct. So it's just a matter of which way this consolidation pattern breaks will determine whether or not this is a base at the end of like a distribution phase where the dumb money is giving away their stock to the smart money before it breaks out, or is this just a consolidation in a company that's not doing well before the next leg lower? I don't have the answer to that. I don't have a strong take on First Solar. If you do and you're bullish on it, well, then you could start to build in long versus 120, or you could wait for confirmation of the breakout through 140. Or if you're super bearish on it for some reason, you could do the opposite. You could start to build in short versus 140 and or trade for the momentum for the breakdown through 120. Do I think that Philip Morris looks good for a short? Ooh, wow. Look at these consumer staples still running. I don't like trading consumer staple names. They're just too slow. They're very slow, and that's stuff that I would consider being an investor in if I like the company, and I would never invest in Philip Morris personally. But like Procter and Gamble, I don't ever trade Procter and Gamble, but Procter and Gamble is a decent holding in one of my retirement accounts. I'm pretty sure, um, and just dollar cost average in it a little bit over time. Super slow mover, gives a nice dividend, is relatively stable, holds up well in a recession. Don't mind having some of this in my retirement account and having it sit there for years and years and years. Philip Morris has had a really big move to the upside. If you're asking me if Philip Morris looks like a short, I think what you're asking me is if I think that consumer staples can roll over. And I don't know. Um, Consumer staples are, even though I don't trade them, they're a pretty interesting sector because in the early stages of recessions and bear markets, they tend to hold up really well and move higher. And we've seen that recently. Consumer staples have been holding up great. But into the depths of those recessions, when things start getting really bad, they usually start selling consumer staples also, just because if you need cash, and this is where you're getting it from. So I don't know. I don't know if the XLP is going to roll over anytime soon. It'll probably continue to hold up decently well. And then as far as Philip Morris goes, that's even relatively strong compared to most of the XLP. So I don't know. It's not extended, really. It's been grinding higher. Grind higher is not an extension. I guess I would harken back to something that Sami Abu-Sad says a lot that I totally agree with, which is that you really should not try to short 45-degree up channels, like those grindy up channels. They just last and last and last. You want to short them when they're breaking out to the upside and going parabolic, or when they're just failing and breaking down. Yeah, Oscar is a play on that. I don't really trade Oscar. They did report pretty good earnings today. And I think, fact check me, but I don't know if it means anything or not. I think, isn't Jared Kushner a really big owner of Oscar? Maybe at one point in the past he was. Um, so obviously there is some family affiliation there with the president. From Dave S. For new positions, day trades, are you still switching from the 5? Yeah, about 10:30. Switching from the 5 to 15-minute chart. But I do both. When I'm looking at the 15-minute chart, starting at 10:30 or so, I'm doing it in conjunction with the 5-minute. Can't short Zinn. They own Philip Morris. Man, I probably shouldn't even say the story, but I went skiing a couple months ago. My wife's cousin was visiting, and he was inhaling those Zinns, and I don't know. I was like, let me try one, and I tried one, and oh man, awful. First of all, and I thought I was gonna be sick. Like I was so lightheaded and so dizzy that we got to the top of this like pretty tough double diamond area that actually has like a little bit of a cliff, and I fell like backwards sideways because I like couldn't even stand. Like I tried to stop and I couldn't even stand, and I just like fell backwards and sideways. And then he told me it was like a 6 milligram one, and that's like a level up from the 3 milligram ones. And uh, yeah, like I didn't get sick. I thought I could have been. I felt like I was getting kind of close, and I spat that thing out, and I'll probably never do one again. But I mean, I have zero nicotine tolerance, like zero nicotine tolerance. Like I might smoke a cigar once a year, maybe. But that's about it. And I guess like whatever. He was like, oh yeah, I probably should have told you that this was like the 6 milligram one, not the 3 milligram one. And I was like, okay. I almost just fell off a cliff backwards and sideways. Think I'm done with these drugs. um, yeah, it's sick. From David, regarding the float, how does the float affect the stock, and what do you look for as a minimum number? Would I be able to find the float on my platform or somewhere else? Sure. So, um, float is one thing for sure, but what I do, one of the first things I do, and someone just asked me about a stock I never heard of before. I think it was Richard, ABAT. So the first thing I did, and I didn't even say it out loud, I just did it automatically. When I don't know a stock, the first thing I do is I just eyeball what the average daily volume looks like on it. And less, if it's more than 1 million shares, I'll trade it. Like just again, just eyeballing it, and just eyeballing this. It looks like on average, this thing does 1 million to 2 million shares a day. So I would trade it. Um, so above 1 million shares a day on average, I'm probably willing to trade the stock. If it's if it trades between 500,000 shares and 1 million shares, I become cautious. It's like a maybe I will. And if I see that on average, a stock trades less than 500,000 shares a day, it's automatically off my off my software. I'm not interested in trading it. These are general rules, of course. So that would be the first thing that I would say that's what I look at. Now, when it comes to float, no, I don't think that the trading software tells you float, but what I use for all that stuff is FinViz. FinViz is free. It's great. It provides a ton of information. So let's have a look at ABAT since we're talking about ABAT. I already had FinViz ready to go on one of my other screens here. So ABAT has a 81 million share float and a 7.26% short float. FinViz is great. It also gives you a ton of information. Like when I wanted to know Google's forward PE earlier today because we were talking about it, I was able to tell through FinViz very, very quickly. And again, it's free. So that's cool. So when it comes to the float of the stock, I generally don't care. What I care more about is what I just did. Having a look at how much stock does the volume trade. I also will have a look at the level two. If I'm looking at a really wide spread, I'm usually not interested in it. Or if I look at a 5 minute chart and I see that there's a lot of gaps in the 5 minute chart, I'm usually that means that goes entire 5 minute periods without trades going off. I'm usually not interested in it. When it comes to the float, I don't generally use the float to tell me whether or not I'm interested in the stock or not. The main thing I look at the float for is if I'm seeing names that are squeezing. So if there's a stock that's going crazy, like what was it? No, like WRD, I guess yesterday. Not the best example in the world, but when I see that a stock is going a little bonkers, like WRD did yesterday, and it's squeezing up. I mean, the thing went from $7 to $9 over the course of the day. It's a pretty big move for a cheap stock, and again, not the best example in the world. You can certainly find ones that are much crazier than that. I want to see what the float is, because if it's got a really small float, like let's say less than 10 million shares, I am probably not going to want to short it, because it's the really low float names where the fundamentals just do not matter. Like this bull, I think was maybe an example somewhat recently, like when it SPACed and it went from 26 to 80 in a really short period of time. Uh, Something that just doesn't have a large tradable flow is something that'll rip your face off and ruin your career if you're trying to short it. So I generally won't do that. If I see that it's got a really big flow, like what do I still have up here? Is this it's WRD. So WRD with a 250 million share flow, at some point, like the float matters, and it will inhibit the stock from getting too crazy. And by too crazy, it's not to say that this thing can't have a rip from 7 to 30, but it's probably not going to have a rip from 7 to 5,000. And I say 5,000, not even exaggerating. If you remember, I think HKD, which is one of these low float insanity things, after it IPO'd or whatever it did to go to market, this thing went from $20 to, can't even really see the high, over 1,000, right? I see 919. Pretty sure it went well over 1,000 in a handful of days. That is probably not going to happen to 2,500. Thank you, Rex. Yeah. So they went from 20 to 2,500 in a handful of days, even though it's like basically a fake company. So of course it went back down to 2. And if you shorted it at 150 because you were like, this company is basically fake and belongs at 2, guess what? You were right. Guess what? You're broke. Because there's no way that you held on to that thing from 150 to 2,500 back to 2. So I like that's the biggest thing I look for when I'm looking for floats is if I'm seeing a stock squeeze. If it's got a real float, I can feel comfortable-ish. Doesn't mean you can't like you should forgo your risk management, but I can feel comfortable-ish at a certain point that it's going to stay somewhat rational and I can look to short the stock. Whereas if I see, oh, this thing's got a 3.5 million share float and is ripping, I'm probably staying away from that. Or going long. I might go long, which you still have to manage your risk on because it's probably not worth what it's trading at. Eventually it's going to go down. But I would rather, if I see a super low float name that's squeezing, find a way, even if I'm potentially chasing a little bit, to go long the stock to participate in that squeeze before I would ever consider shorting it. So, hope that helps. Thank you for the question. Over on the YouTube, not much going on in there. Formula One, if you have a couple trade ideas for stocks that are highly correlated, how do you think about managing, diversifying your risk? Do you usually treat each separate idea as a trade, or do you distribute risk evenly as if it were one trade? I do think about that. So I don't really have a strict rule for it, which I probably should because you should have rules for everything that you do in trading. I would say it's just something I note in the confines of making my game plan. That it's like, all right, you're short NVIDIA. Do you really want to short Micron also? If the answer is yes, well, then just realize that if what happened into the close today happens, that you're taking a double whammy on the short because it's going to influence both of those stocks with news. So you got to be a little bit careful on that. So for me, I did get a little bit screwed into the close because I'm short Micron and I'm short NVIDIA, but I'm long AMD. But AMD didn't really react well on that news, which I thought when I had both those shorts on, I was like, I don't really love having both these shorts on, but I'm long AMD, so hopefully they can help offset each other a little bit, and then that didn't really happen today. So I took a bit of a hit into the close, which was very frustrating because I was actually having a pretty good day despite all the insanity and all the volatility. And then, I took a P&L hit into the close. Just the timing of that was also terrible. I couldn't trade it. The charts broke out. I was like trying to do my end of the day, spreadsheets and stuff, and the news hit, and I couldn't really watch it properly, and wasn't great. Thus is the life of a trader. So on that note, it's almost 5 o'clock. I'll wrap it up. Have a great night, everybody. I'll see you all tomorrow.